But today I'm going to be going over how I personally trade US30 and how I take advantage of the opening 930 breakouts. So, nothing more to be said. Let's just get right into it. So, the US30 strategy is incredibly simple. There's not a whole lot of thinking behind it. You're not using concepts like supply and demand. You're not using concepts like liquidity. You're not really using any concepts. All you are doing is looking at the minor 5-minute highs or lows that get formed or show themselves within the time frame from 9:25 to 9:29 Eastern. So that is right before the New York Stock Exchange open. So what you're essentially doing is you will mark out the minor 5-minute highs or lows, just before 9:30, and then as 9:30 opens, you want to enter immediately as price breaks either side of the minor structure. So if you have structure set up for sells, you will enter as soon as price breaks that line. If you have structure for buys, you will enter as soon as price breaks that line. So same thing for both sides. You just enter as soon as it breaks. You are not waiting to see a push of momentum. It will come with US30. US30 does not seem to care about a lot of concepts or confluences a lot of the time. So that's why we are just keeping it simple, just marking up the minor structure and only trading essentially the first 15 to 30 minutes of open. That's where US30 is the most volatile, and that's where you're going to get the most moves from. So like this says right here, at 9:30, enter immediately as price breaks the minor structure. So I'll show some examples with that, but essentially you just want to enter as soon as it breaks. You do not want to hesitate. You do not want to second guess yourself. If you have the minor structure and it is there, you want to take the breakout. So the rules for this is just like normal. We're going to have a 30-point stop loss, and we're going to be targeting rather 1 to 2, 1 to 3, or a 1 to 4. I personally go for 1 to 3s. If you're struggling holding your trades or you feel like you've been getting faked out a lot, I would say go for a 1 to 2. You always have to be able to adapt what the market is giving you. So in conditions like we have been going through recently during September, going for 1 to 2s might not be the best, or might not be the worst option for you. So it's all preference, but like I said, I personally go for a 1 to 3. I go break even as soon as price hits a 1 to 1.5 risk to reward. So if I'm in a trade and I'm aiming for 90 points, as soon as I get 45 points secured within my trade, I'm going to be break even. I will be risk free, and if the trade reverses on me, it will be break even. No loss, no win, no profit. Another rule, 2 to 3 trades per day. I would say to be on the better side, it's 2. If you lose the first 2, the chances that the third is going to win is pretty low, but there are days that it happens. So I would say that would be really up to your risk tolerance, your risk profile on your account. But yeah, that is all the rules for the strategy. So now I can go over a couple examples. So I'll actually go over today. So if we go right before 9:30, so this is the 9:25 candle. So 9:30 has not opened yet, but the second that I click this next candle, it will open. So this is what we do, right? We have minor structure or any form of structure on the 5-minute chart, and we just mark it up right before 9:30. So we have these highs right here, we have these lows right here, or we have these lows right here. So as soon as price breaks past either of these lines, any of these lines at 9:30, you will immediately enter. So I actually took this trade today. If you seen this little high right here, and 9:30 is about to open, you would enter as soon as price breaks above this line. So I'll just let the next candle, actually I'll enter a buying position right here. Boom. We can see next candle opened up. Where did it go? Hit a 1 to 1.47 risk to reward, and then reversed all the way back down. So now, this right here, we'd close that out. That would be a losing trade. It did not hit our 1 to 1.5 risk to reward, meaning we were not break even on this position. So we got that, obviously. That was a little loss right there. And then we're going to look the same things right here that we just did for the upside. We're going to do it for the downside. So we would enter as soon as price breaks past these little lines right here. Just this minor structure that we have marked up right at 9:30. So if we drag this down to a 90-point take profit, I'll place this little tool on the chart. So right here, this little line right here, this is our break-even point. If price comes down and hits this black line, we'll set a break-even stop loss because that's our 1 to 1.5 risk to reward. So I'm not going to execute the position for this one, but we can see price breaks past, hits our break-even point, continues down a little bit, continues down, and we hit take profit. So a lot of the time with US30, if price gives these big, very impulsive pushes, the reason why we set break even specifically at a 1 to 1.5 risk to reward is because most of the time, like I said, when US30 makes these big pushes, it will around go to 30 to 40 points within the move. So then our break even point naturally is 45 points. So if we come 45 points into profit, we're essentially just knowing that if price reverses, we'll most likely head to the opposite side. So right here, come down, enter, take profit. If you entered here, past these little minor lows, you would have had a break-even trade. Price would have, I'll actually mark it out a little bit differently. Right here we entered, right there, stop loss. Price would have came down. You would have entered in the trade, price would have came down, came right back up, and tapped you out of break even. So, unfortunate, but you're saving yourself from a loss by doing this. By setting the break even and by having this rule, you are saving yourself from unnecessarily losses. So, for example, like right here, this trade would have won. This trade would have been break even. So, on US30, these little minor differences in your entry are going to matter a lot. That's why I would also say if you're going to be trading this strategy on US30, you cannot hesitate. If you are going to enter a trade, you need to get the earliest entry possible so that your stop loss is in the safest place as possible. So in a situation like this, you could have taken this trade. I actually did take this trade. This little lower position, and I got stopped out at break even. But I know somebody who took this entry up here and they got take profit. They got profits off of this trade. So it all just depends on really how much are you willing to risk on the trade, and if you want to take that earlier entry, it is better. It is better to get an earlier entry and get faked out than it is to take a later entry. Like if I just rewinded price, let's say I were to enter impulsively down here, right? Price would just come and stop me out really quickly. So this is why right at 9:30, we're marking up the minor structure and taking it as soon as it breaks. There's no hesitating. You can even set buy and sell stops. So in a situation like this, you could literally set a sell order at this line. The same way that before 9:30 opened, you could have had a buy order at this line. You can literally set buy and sell stop orders. You can make it as simple as you want. Just make sure you stick to the mechanical rules of a 30-point stop loss, 45 points, or a 1 to 1.5 risk to reward. That's when you go break even. You're targeting rather 60, 90, or 120 points, which is rather a 1 to 2, 1 to 3, or 1 to 4 risk to reward. And you are just keeping it simple. You don't need to worry about other concepts such as supply and demand, liquidity, all of these different things. You are just executing the first 15 to 30 minutes of open only on US30. And that is obviously just for this strategy. You will get impulsive moves at 9:30 on pairs like NASDAQ or on pairs like ES, but US30 is a lot stronger directly at 9:30. It has a lot more of impulsive moves, and that's why we're just taking advantage of it by taking the break as soon as it presents itself. We're not waiting for extra confluences or anything. And with this strategy, you could also use trend lines. So if you had a trend line right here, you could enter as soon as price breaks this structure with the trend line, boom, right there. Target, 1 to 3, whatever, hit your take profit easily. Very simple. I will say that with this strategy, you will take a lot of losers, but that's what the risk to reward is for. You're going to get faked out, and you need to be okay with getting faked out if you're going to trade this strategy. It is very effective as long as you just stick to the mechanical rules. You don't want to be taking a US30 trade at 10:15 or 10:30 or during the afternoon session. US30 is most volatile right around 9:30. We can clearly see if I actually turn on a little oh, well, it's not showing itself now. 9:30 right here, big impulsive move. If we go to another day and we go to 9:30, we have, I mean, it kind of chopped on this day, but the 9:30 candle, it was pretty big. We had a big push down. If I go to another previous day, 9:30 candle, it's very big. It has very big impulses on both sides. So this is why we're just taking advantage of the little minor structures that show themselves on the 5-minute and entering as soon as they break. So hope that covered it. Very simply, or very simple strategy. It's not something that should be complicated or overthought whatsoever. So I hope that helped.